morning, good afternoon, good evening, and welcome to today's Bull versus Bear webinar for Thursday, the 10th of November. Steve Miley on the call for trade day. Welcome, everyone. We're going to go for our usual, normal, regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at what some articles from the major news wires. What are those fundamental geopolitical market events that are impacting the financial markets right here, right now. And we'll take a look at the charts, what's coming up potentially on the support and resistance levels from my personal perspective, my own analysis, just to see where trigger points could be coming early today. Right. Calendar, what we've had so far today is very little, various speakers, nothing that's impacted markets thus far today. What we've got coming up is CPI, the most probably important event of the week. Yes, we've had midterm elections sort of coming and going. We got a strong rally earlier in the week on anticipation of the split in Congress. That looks to have been delivered, but then equally, by the looks of it, Republicans not doing quite as well as potentially expected or that the Democrats had feared. And that means, I just read this morning that, potentially like a multi-decade, I can't remember what the headline was now, but the midterms for the incumbent, regardless of if it's a Democrat or Republican, these are the best results for the incumbent president or the incumbent party president for decades. I think I read this morning. So for whatever reason, who knows? So there you go. So probably that meaning that even though it does mean there's probably House has swung to the Republicans, that it does probably mean that split means that paralysis in the political system is taken as a positive by the stock markets. However, we sort of had a bit of sell the news, so buy the rumor, sell the fact. Sell the fact yesterday, and initially it was just a dip, but then turned into something a lot more aggressive. And as if you go and look at my daily reports today in the trading room, actually I've just gone to the trading room. I should have gone to the trading room because I'm going to get my feedback. If you go into here, let me see if I can get there before we get all the horrible feedback. Yeah, I've got that. And then I'll go back to the calendar. But you'll see in here on my daily reports for today, sell off, risk lower. I haven't been negative for a little while in here, but the extent of yesterday's sell off in here for the S&P and the Nasdaq has caused me to shift to a more negative outlook going into today. So we got to look at the calendar. Yeah, got it in just over an hour. CPI data, I won't run through the numbers. You can see the numbers yourself. But we'll certainly be watching those. Later today, we do have various Fed members. Whether they respond to the CPI is going to be interesting. Eastern time, all of these times I'm going to give you. Harker at 9, Mester at 12:30, George at 1:30. Okay, and then Williams at 6:35, 18:35 that is. So, we've got a load of Fed speakers. They might react to the CPI data, so we're watching out for that. One thing I thought interesting in here, Friday's inflation data may have more of an impact on rates than CPI. Traders are laser focused on Thursday's key CPI. Be worked by this is Friday's University of Michigan 5 to 10 year inflation expectations will resonate with Federal Reserve officials fear for a price rise in coming trends. Okay, so we're keeping an eye out for that as well. For whatever reason, Bloomberg feel that data could be important as well. So we're certainly Fed's Thomas Barkin flags importance of inflation expectations, and that's right. Inflation expectations are important. It's not the actual inflationary pressures, the expectations are the problem. If you get inbuilt in expectations that if inflation comes one year and goes away the next, I was just talking to someone about this today. If we have inflation, we get 10% inflation for 1 year, and then there's not expectations that continues to the next year and the next year and the next year. If it falls out the system and inflation starts coming lower and expectations are not that it's going to be higher, then companies won't necessarily keep putting their prices up at 10%, right? So then inflation necessarily falls because expectations aren't that inflation continues to go higher. It's the expectations, it's the anticipation, it's the behaviors as opposed to the actual the events themselves, right? So just because inflation is high doesn't mean it stays high. So That's significant. And inflation expectations are really important. If there's an anticipation that this is a blip in inflation, a big blip, admittedly, but it's being driven by obviously, big external events, post-COVID bottlenecks, supply chain issues, post-COVID, plus a war that sent, energy prices up, gas prices up 10, 20-fold, whatever, right? Electricity prices up tenfold. So, no surprises, inflation's up, right? It's going to have a knock-on effect. But if those start to fall out of the system, if expectations are that the inflation doesn't increase, then if we don't expect then another tenfold increase in energy prices, which we're not expecting, energy prices are actually coming down. So by the base effect, those, going year on year, the inflation comes down. So as long as companies don't keep putting up prices because they thought, 10% up last year, going to have to put them up 10% this year. So that's why expectations are important. Okay. And and that's why it was pointed out by Barkin. Okay, so definitely important. Well, let's wind back a little bit. 5 things you need to start your day. So inflation outlook, inflation rates. We're talking about that already. Coming today, crypto still in the headlines. Binance stepped in and then stepped out of coming in and buying out FTX. It's a big deal. It's having a massive impact. I think that didn't help yesterday with stocks. I think it pulled stocks down. Crypto got pulled down on the back of this. We had a slight rebound, and then when Binance pulled out, and they're also citing, citing potentially legal reasons as well. So that's not good, right? So and potential domino effect. Okay, inflation. We've got that coming up. We're down to 3 races now for the control of the Senate: Georgia, Arizona, and Nevada. And each party needing to win 2 of those, obviously. I think it might have been here. Okay. So President Joe Biden said he still plans to seek re-election. He'd like to be official court early next year. He held a strong night. No, it's not in there. I don't know where I saw that. No, I definitely saw that today about the best incumbent presidential midterm election results for X years. If anyone finds it, pop it in the chat, send it to me. Be just interested. I can't remember where I saw that this morning. So risk appetite recovered, starting reprieves in cryptocurrency. So we are seeing a bit of a bounce overnight after the sell-offs from yesterday. And it's all about inflation. We know that. Okay, so not much in there really. So US futures slightly rising. CPI bets keep bonds on edge. Dollar rises. Bitcoin steadies after the sell-off. So not really telling us Friday's inflation. We're looking at that number as well. Oil down because of China demand concerns. FTX warns of bankruptcy. We've kind of already covered that. FTX fall, battling billionaires in a failed bid to save crypto. Shares dip, dollar strengthens in markets. US inflation data. It's all about inflation today. So we're going to definitely be keeping an eye on that in just under an hour. And we're just going with the breakouts really. Consumer inflation, crypto deflation. What else do we have? So all the same stuff. So European bourses this morning, DAX is pretty much unchanged. FTSE's only down 1/10. CAC's down 0.5%. Not much going on that side. Bit of a dead cat bounce in here, really. Nasdaq's up 0.5%, but Dow Jones and the S&P about 0.2 and 0.4 after significant sell-offs of over 2% or around 2%. For the Dow and the S&P, Nasdaq was more than 2% down yesterday. I think this is interesting, or not that one, this one. This is climbing higher, right? This has been edging higher. I'm going to actually go in. This is the 14th deck, okay? 425, 450. That's only up 50 basis points. This is the 75 basis points. It's been between 50 and 75. So I'm only going to look at one of these. If we go in and look at the historical for the 425 to 450, okay, on this date, if we go in here, historical, and I'm going to have to get rid of all of this. It takes a while. 425 to 450, I said. We'll get rid of all the others for the 14th of December. And there we have it, right? So the market, this has been edging up, really. Seen a little uptrend in here now since basically the end of October. Been pushing slowly higher. We have been a little bit higher, been above 60%, but rebounding again in here. So pushing higher, a growing chance that we're going to only get a 50 basis point rate hike. The market will really like that. If that continues to rise, the market will like that. The fact that the potential for the Fed to back off a little bit. Right, I've put on a little bit of analysis on here already today. Let's turn to the charts. So yes, we had a big sell-off yesterday. Look, it destroyed, the rally we've had from the previous 3 days. Friday's rally was obviously data-driven, employment report. Monday, Tuesday, pre-midterm election rally on hopes of a split of Congress. Sell-off yesterday, sell the fact, plus crypto, no doubt crypto also sending us lower yesterday. If we look on the technicals on that, here's the Fibonacci retracement of the rally through Friday through to Tuesday, and we wiped out, not only took out that low there, wiped out that low through the 50% and 61.8% retracements, just now nudging back a bit above. So remember yesterday I went through about all these different, so basically this downtrend has been reversed by this rally. This rally was reversed by the sell-off that we saw at the beginning of November. That sell-off was reversed by the rebound that we saw from Friday through Tuesday. And now the rebound has been reversed. So we're constantly reversing. We're finding like massive value in this area here, in this whole big area here. And the market is just really now in this kind of area here. It's just oscillating in that area there, this bigger kind of area. Yeah, it's finding value. And where are we in this kind of bigger area? We're pretty much in the around the halfway point of that area, right? If you look to the high to top to the bottom, there's the 50%. So we're just holding above halfway of this kind of value area we've found. And we've neutralized this sell-off. Okay, the bigger sell-off right from the top, from the beginning of the year, there, that's still intact, lower lows and lower highs. But this down leg has been reversed. Then the up leg in here was reversed. This down leg was reversed by this rebound. This rebound was reversed by last week's sell-off. Last week's sell-off was reversed by the Friday through Tuesday rebound. The Friday through Tuesday rebound was reversed by yesterday's sell-off. So we're neutralizing. The market's just pivoting around, poised. It's not really got a strong, bigger direction here at the moment. The only big direction that's still intact is that one. And that's kind of why I pivoted to more negative yesterday, because where's the dominant force? Well, the dominant force is from yesterday now, because all of these are all neutralizing each other out. So the dominant force is from yesterday, and yesterday was down. We wiped out the 61.8. We've rebounded whatever, between 0.2 and 0.4%, but dead cat bounce, right? Dead cat bounce. Why is it a dead cat bounce? Dead cats don't bounce, right? There, look, boom, no bounce, right? So this looks negative to me. Trigger points basically down through the low on the downside. I think it needs to get all the way back above here, really. You've got this trend line. We can pull that trend line out a bit further, if you'll allow me. Hopefully. Oh, there we go. Oh, it's not really working that well, is it? Why does it keep doing that? It keeps dropping it. There we go. Got there in the end. So above this little swing high here, I think it's important, and that will probably take us up close to, but not all the way to the trend line. So the swing high there for me, top side, 82.5. I think it needs to get that to at least ease the bearishness. Really, the trend line that comes off the high there from a couple of days ago, we need to get back through that trend line. That trend line at the moment is sitting around just below 3,800, 37.98 right now. So 37.98 and before that 82.5 minimally to start to ease the negativity from yesterday. Otherwise, down through the low, looks like it take us all the way back down to the actual lows down here. Okay, Nasdaq, similar story. All of these different trends have been neutralized. Yesterday's sell-off neutralized the rebound. We go into the 15-minute chart, get rid of this fib, and we put on the fib of the rebound, and you'll see we're down through the 61.8 of that as well. So you've neutralized that. Again, pull this trend line out. It needs to get above this trend line. Oh, what is? Oh, there we go. Okay, there we go. That trend line is going to be all the way out there somewhere, miles away. You'll already see reverse this more aggressive one that comes down through here. So we can draw that on maybe. So this has already been reversed, I think. Oh, no, not quite. Actually, look, that works well. So we failed right at that trend line there off of these peaks here. That fails right exactly at it. So minimally above there, and there's a little swing high there as well from overnight. So not just above 900, 10904 and a half, and then this high here, 904. Yeah, so up through like 905, 910 would be slightly more positive. Ultimately more up like here. There's some resistance up here, 975, 980 area, and then the trend line, which is going to come in more like 11,000. Below the low, all looks more negative again, and then it could easily be back at the lows. It's all going to be on CPI though, right? Quick nod to the commodity markets. Start off with oil, very negative. Big sell-off last 2 days, lower again today. Took out these lows over here. That low there was 85.30, looking very negative. Lower again this morning. Can only play that from the short side from my side. Getting a bit of a bounce, looking for any strength, selling into any strength here for oil. And on the gold side, a slight dip yesterday, holding in very well, having had 2 surging days from last week and then 2 days ago. Some really strong days from Friday and then Tuesday, held yesterday, holding today. If we go in, it's just been sideways. This is really strong. The fact that the market can do this, and remember, we did this Friday, then you had like a flag pattern here, lasted a day and a half, 2 days, and we're seeing the same again. Surge, flag pattern, day and a half, 2 days in. This could easily surge higher again. This is pointing higher, okay? So this would be gold positive, dollar negative. So we would be looking for, that's then equally would be positive for stocks, okay? So we're looking for potentially a softer reading on CPI. That's what we really want, right? Softer. If you're a gold bull, if you're a dollar bear, if you're a stock index bull, you want a softer reading on the CPI data, clearly. I mean, right, we want inflation to come down. So yeah, be watching that. And this is signaling that's what the market is kind of setting up for. Got strong flagpole, flagpole, flag. Okay. Could easily see another. I'm not saying we're going to do this again. I'm not saying we're going to get another one of these. Yeah. Where we saw what was the high lows on these. These were high low was 67 to 20, 17.20. So $53, over $50, 50. And this one here was 31 to 86, again over $50, 50 to $55 on each of these rallies in here. I'm not saying we're going to get that, but you could easily see another 20, 30. And then these highs over here are going to be important on gold. These swing highs from the beginning of October. The peak is at 1738.7. That's going to be critical because then you have a triple bottom. So we could have a go at that today, but it needs then obviously a soft CPI number. All right, guys, I'm going to wrap it there. I'm going to wish you all a great trading day. Helmets and goggles on for the CPI inflation data. I'll be back with you to run through the result of that tomorrow on the Bull versus Bear webinar. Until then, take care, stay safe. Bye.